So, on a rate of 1 to 10, how effective would you say your investment methods are? Your way of doing it.
First and foremost, I think I must be very careful in answering this question because there are a lot of actually. Just give me a moment. Let me switch off this phone for.
Alright.
Yeah. So a lot of people actually state that they have the best method, or they criticize certain method because in the area of investing, there's basically three broad school of thought. The first school of thought is actually what I call the market efficiency theory, meaning that there's no such thing as a unique method or a special method to gain advantage in the stock market or any investing, because the market know everything, so all the information is really priced in, so nobody actually have an advantage. That's first school of thought, which Warren Buffett says is rubbish. The second is actually what we call a technical analysis. That means they look at chart, they look for patterns, and they study the price chart and the behavior of actually so-called the market. That's the second school of thought. The third school of thought is actually what we call fundamental investing, which is value investing. And that itself, we examine the fundamental of things, and we don't study the price, so much of the price movement. Now, if you ask me which one is why is so unique about value investing or fundamental investing, is I ask a very simple question: is can you name me the world richest investor right now in your mind that come to your mind?
Warren Buffett.
Okay, cool, excellent. And I just asked myself, if he is the world richest investor, I just take a 3-step back and ask myself a very simple question: is I want to know what theory and what knowledge he learned and acquire and apply to allow him to have a consistent return for the past 42 years. And compounding at about 20% year to year, with no drama, and make him the world richest man. So it's very simple. Just ask this question and just examine. So, and it has been proven time and time again that value investing works very beautifully and very elegantly.
Alright.
Yeah. Okay. And just to give you a real statistic, and also those who are watching this video, in 1965, if you invest $10,000 US in this company called Berkshire Hathaway, today every $10,000 US will be worth about $55 million US.
That's a lot.
Yeah, without you buying or selling, you just need to go to sleep, and that's it. Yeah.
Nice, making money in your sleep. That's good.
Yeah.
Okay. Okay. Just roughly saying, what would you say is the difference between investing and trading? How would you say the difference?
Investing and trading. Okay. I'll use this. I will use this word. Actually, most trading, I will call most of them are pure speculation. Okay. Buying something today and hope that you can sell higher tomorrow is what I call speculation. Okay. Because for investing itself, what we buy today, we make money today. Meaning, say, I know exactly what I'm investing today and buying today because I know how to value the thing, and I want to buy under value. So the moment I buy today, I know that the things that I actually invest in and buy will generate me cash flow, or generate me the cash flow itself. That's a cash flow producing component itself. So if you want to buy something and hope that you can sell it higher tomorrow, well, you're basically taking a bet. You can go to casino, it's faster that way.
Yeah. Alright. Okay, and in this state of the economic downturn right now, do you think it's advisable to invest in stock market?
Of course. In fact, there's the best time to invest in I would say the stock market for a few reasons. The first reason is because a lot of people have a misconception of what's called stock. Actually, they thought buying stock is just a paper or number jump they see on the screen. Okay, actually it's not. Behind a stock there's a business. I give you one example, let's say, which I think you might ask me, quote you one example. Can I just know that do you do shopping yourself?
Of course.
Okay.
I'd be lying if I said I didn't.
Have you heard of this company called Padini?
Yeah, of course.
Okay. So I'm just curious, have you bought anything from Padini?
Yeah. I think this dress that I'm wearing is from Padini. So.
Oh yeah, what you're wearing maybe is from Padini right now, or maybe your shoe that my colleague is actually wearing is actually from Vinci. Vinci is actually from part of Padini, right? So, and Padini actually run a business, and since 1990, if you have invested in a company in 1999 or 2000 and to today, you have generated 1,000% return on investment. and you have collected 200% of dividend income just from that Padini business itself. So my key point is this: don't look at the stock as actually going in and out every day, but understand there's a business running behind that stock, and you must understand the fundamental business model. Okay, which management, who are the management that are running the business, and how do you value the business? And you only want to buy that business when the market gives you a ridiculous undervalued price, and that's only happened when the crisis happened.
Okay.
Yeah, because when crisis happen, everybody is having fear. So, but my question is this: let's say if tomorrow Monday the market, let's say euro downturn, do you think Padini still will have a lot of shopper?
Yeah, chances are.
Because the last I checked when I was in KL, when actually Europe having a lot of fear, I still see a lot of people pack Padini stock.
Yeah, true.
Yeah.
This is true.
So, and true enough, the last quarter that they released the result, Padini actually outperformed all the expectation of what the analysts actually thought of their business. So, meaning to say that their 9-month result actually far exceeded in terms of net profit of the last year record. So only 9 months, they already surpassed last year what they have made in terms of net profit itself. Yeah.
So you're saying that it depends on circumstances and in the companies itself and the state of the market. So it's dependent on a lot of factors, is what you're saying.
Actually, in our organization and in our investing methodology, we use something called a 3R approach. 3R stands for, we look for the right business model, okay, with comparative advantage, with the right management, and we only buy them at right undervalued price.
I see. So there's a lot of research involved in this, I would say.
There will definitely be research involved.
Right. Okay.
Yeah.
And okay, would you mind giving us just one example of a stock that will be wise to for us to invest in at present? Just one example.
Oh.
Or is that giving a secret of the trades already?
No. If you really want an example, then I would strongly encourage those who are watching this video right now to come for actually the Crown Property event.
Nice.
So I will actually share during on the stage.
Okay.